Hello, Mark Sturdy with another summary of the charts, long, medium and short, of major world markets as they stand this Monday morning. And let's have a look at the summary, and you'll see that we remain bears of the dollar against the euro, and we are bulls of the dollar against the yen in all time frames. We remain bulls of the S&P 500. We are additionally bullish of the Nikkei 225. Those are our strong convictions in all three times frames. There are other things to say which are important because there are charts today which are pregnant with possibility. In particular, bearishness for bond prices in Europe and UK, potentially, not yet, but potentially, and bullishness for oil, potentially, not yet. Let's first of all go with our strong convictions and have a look at the weakening of the dollar against the euro, which we've long held. Here is the trend. Here is the broken resistance, 1, 2, 3, and if we go in medium term, we'll see the support the market has experienced from 114.73 once, twice, 3 times. We can see it to be very strong. Here is the new weakening trend of the dollar, having strengthened over the first few months of this year, and we think the support at 16.39 will serve as a springboard for further weakness. Similarly, we look for further yen weakness against the dollar. Here is the long-term chart, the creation and completion of a continuation triangle at the prior high from many years back, 147.63. The completion through that upper triangle. Here's the triangle again, and the completion sending the market on a good deal further. We think there's more to come. We think it's going to go about 180. There has been hesitation around this previous high of 158.87. We think there is the means by which we can overcome it by this smaller triangle and a head and shoulders reversal in the day chart. It hasn't unambiguously broken through 159.19. We think there's more to come. Stocks, well, we were bullish of the S&P 500. Here is the long chart, the redoubtable. All efforts to sell off once, twice, 3 times have failed at prior highs. The recent prior high bounce is emphatic and dramatic and has pushed us through into new territory altogether. That push through to new territory has been sustained over a number of days. We think it's impressive. The Euro stocks, although its long-term charts remains robust, the bounce from the prior high is far less robust than than America. The FTSE is similarly. It has maintained its long-term bull charts, bull trends, bounced off the prior high like the others, but it too has dithered and unable to make new ground. The Nikkei, on the other hand, not only is its long-term chart fantastically bullish, breaking through 39,600 from the 1980s, the catalyst for that was this triangle, which has driven up and got to its minimum target. But it also has broken, having bounced off the prior high like the US, it has pushed on through. That is looking good. There's a little more structure than in that bounce than the US. There's a head and shoulders reversal at that prior high, calling it up to the 59,500 minimum, and it looks as if it wants to push on. Bonds are pregnant with possibilities, but nothing dramatic. There is, first of all, worth noting that the US, although it's in the middle of a trading range, looks bearish and looks like this has failed to rally back through 111.50 in the day chart, and it looks like a bear rising wedge has been achieved, which will send it on further down. Lower prices, higher yields. But the more interesting charts are these powerful ones in Europe. First of all, the German Bund looks like breaking through prior highs. Even though the short-term price chart, it doesn't look exciting, and there isn't a pattern in the it clearly either completed or being constructed, the market's obviously struggling to bounce back above 125.90. There's enormous short-term pressure and long-term pressure for lower levels. The Gilts is the outstanding chart to be watched closely, which is first of all, the long-term chart of this triangle driving the market down, the drive down through the prior low, which after a long period of sideways price action. This, I think, is the critical chart for new entrants to the gilt market looking for bearishness. Were this triangle to be completed, this rising triangle, a break above 5% yield would be dramatic and suggest a move of another 1%. So watch this very closely. Another 1% in the offing. Here's the price action. The price chart has no clear structures inside it, but nonetheless, the market's clearly failed at the prior low, which is what you'd expect from a bear trend. And we think watch closely for break up through 5.1 in the daily yield chart. Remember, this earlier chart was a closing chart, and so we looked for a close above 5. This is a high-low close bar chart, so look for a daily close above 511.80, which would set that off. The oil is within a large trading range, no question, but there is the possibility of the completion. Here's the Nikkei price action in the weekly chart over the last few weeks. But here's the possibility of a bull flag. And were the market to break up through what looks like 98 or so, this bull flag would be very bullish for oil. Keep a good eye on oil, a daily close of 98 in the June futures contract. Gold, tremendous bull market. It has found good support at these prior lows, at this prior high, bouncing twice from it. But there's a lack of bull structure. Not much to look at there for the chartist right now. Thank you. Goodbye.